What's up, everybody? Stacking Surfer here. Happy to have you guys join me. Today, we're going to be doing an interview with the CEO of Miles Franklin, Andy Schectman. You guys have seen him on my show before. He's on a lot of other channels as well. I think you guys are going to really enjoy this interview. So we've got some great information for you. So let's go ahead and get started. Stacking Surfer. I think I'm your best friend. Balances in your bank and stack. Hey, Andy, it's good to have you back. Thank you for joining us. And I'm excited that you have been able to take a few minutes out of your day today to talk to us. We've had a lot of things happen. I feel like every time I have you on, something major has happened in between.
I don't know if that's good or bad. I don't know if that's a good luck charm or a bad luck charm, but I enjoy being on these shows with you too, my man. And it's an honor to be here. And thanks for having me back.
Definitely. Well, I think it's one of those things that's indicative of there's just a lot going on right now. There's a lot of change that's happening. And so we're starting to see a lot of different things happen. We're seeing things happen to the precious metals. We're seeing things happening to the crypto market. We've had new laws that are affecting real estate, at least commissions for the agents. We're seeing a lot of things going on with banking, some new banking rules that are coming out. So there's a lot of things that are kind of in motion right now that seem to be making some drastic differences. And I think every time we do this once a month, pretty much, there's just enough that goes on in the month that we see differences.
Yeah, and like I said, I really do enjoy coming here. I've enjoyed our conversations, and I would say to you that over the last 3-4 years, I don't know if it's the same for you and everyone else out there watching this, but life seems to be spinning at a much greater clip. Things seem to be moving much, much faster, and it seems when we were young that maybe we were just young and didn't notice it, but I don't think so. I mean, I think that material events didn't happen as frequently, and when they did, they got much more attention. And now we see all of these things happening all over the place every day, more and more and more. We're inundated with it, and it's in one day and out the next and forgotten. And, it's crazy to me. I mean, something even as you look at the reason the special prosecutor didn't move forward with the I guess you would say the charges or the investigation on President Biden, because he said he was too feeble and too old, and yet he's running again to be the president of the United States for the next 4 years. And if he's too feeble and too old to be to stand trial or to further an investigation on a special counsel, then, how is it that people have forgotten that already and yet are okay with him being the primary candidate to move forward for the Democratic Party? How are they okay with him running the country? Things like this would have never been forgotten, and yet it's just swept under the rug and forgotten about. And that's maybe a poor example, but it's these things that continue to happen that in years past would have gotten far more attention. And maybe that has a lot to do with the left-leaning media that doesn't really report anything anymore. All they seem to do is create divisiveness. And I find it to be very disturbing, actually, more so than the economics of things is what's happening in this country on every front. And it seems to be moving faster and faster and faster. And look, with the big BRICS meeting in October, the election in November, everything leading up to it, I have a feeling that this is a trend, this craziness every time I come on, that's only going to get crazier.
Yeah, it seems to be the case. Right before we got on, you were talking about, I mentioned Boston. I travel out to Boston for work, and you'd mentioned some of the changes that the mayor is suggesting there. And I also live in California. We have a lot of crazy rules and laws that are down here. As a homeowner, one of the things that freaks me out the most is this squatter stuff I hear about all the time in the news. And what you were telling me about Boston sounds like that's going to be potentially just wide open for people. So it's just crazy.
Yeah, I'm a baseball fan, and I've always been a big baseball fan. And watching the Red Sox, it seems to me the fans seem to be, they seem to be Americans. I mean, they have this oozing of history in Massachusetts, in Boston. They seem to get it, at least from watching it from a perspective of watching a baseball game or a basketball game. Or The fans are very, they seem to just to be old school. Now, this is, again, I don't know if I'm making sense, but I understand it in California. I understand it in Minnesota. These are two states that seem to, I don't know, I don't want to say have lost their bearing or lost their mind, but some of the things that they do, Minnesota and California, you have to shake your head at. And to see it in Boston is unbelievable. She's the first, Michelle Wu, the first female and Asian American mayor. She wants to make crimes like shoplifting and disorderly conduct, all these things she wants to take off limits for prosecution. She wants to demilitarize, as she calls it, law enforcement by eliminating tear gas and rubber bullets and police dogs. She wants to put the records of use of force, she wants to make those public, which, is not really very smart to do to the police officers who are forced into using force. Talk about a security risk. But listen to the things that she has on the do not prosecute list. And you shake your head, and it's just unbelievable. Trespassing, shoplifting, larceny under $250, disorderly conduct, disturbing the peace, receiving stolen property, minor driving offenses, including operated with a suspended or revoked license, breaking and entering where it is into a vacant property, this is to your point, where it is for the purpose of sleeping or seeking refuge from the cold, and there is no actual damage to the property. So anyone who breaks into your house when you're on vacation in Boston and they want to sleep, well, they don't get prosecuted. Wanton or malicious destruction of property, threats, excluding domestic violence, minor possession of alcohol, drug possession with intent to distribute, a standalone resisting arrest charge where a person is charged with resisting arrest, and that is the only charge. And lastly, a resisting arrest charge combined with only charges that fall under the list that I just read of charges that are called decline to prosecute. Example, resisting arrest combined with only a trespassing charge. So, I mean, what the heck's going on, man, when a city like Boston would even allow this to be floated out there?
Yeah, what concerns me about that is we seem to be going in the country in a lot of places away from stricter rules, which usually end up with people committing fewer crimes, and we're opening it up to where there's really no penalty for doing it, for committing crime anymore. And when that happens, there's a certain element of the population that says, "Hey, this is okay. I'm going to do it. I'm going to take advantage of it." Especially people that feel like they maybe have not been as respected, or feel like they don't have as much to lose in life. There's a lot of issues that could come up. Plus, we've got the immigration issue that's been going on that definitely can feed into this. Where we've got a lot of people coming into the country that probably won't assimilate. They probably won't abide by a lot of the laws. They're not being made citizens, so they're right now just people that are coming in, and what's going to happen there. So it does concern me.
Well, yet they're not citizens. 17 million of them is the last estimate I heard, and yet there's a law or a proposal to give the states where these people are at, where these immigrants are largely congregating, and giving those states extra votes for the Electoral College. There's a theory that people should check out. Some of you probably have heard this. I don't know if you have, but it's called the Cloward-Piven theory, and it was named after a husband and wife, Cloward and Piven, who taught at Columbia University, ironically at the same time that President Obama was there, and the current goofball chief economist for the U.S. Government, Jared Bernstein. I'm sure a lot of people have watched his ridiculous video that's going around Twitter. This is a guy who wants to lose the reserve status. But the Cloward-Piven theory is something people should Google and read about. It was, I guarantee you, taught to Obama, because the whole theory of it is to overwhelm the inner cities and overwhelm the entitlement programs, the welfare programs, and it also uses the left-leaning media to make the left, the Democrats feel as though that the welfare system is unjust and unfair. The whole thing talks about creating a serfdom of people who will, in essence, render the elections moot because they will never vote for anyone other than the Democratic Party, who will give them entitlements. You read the Cloward-Piven theory, it take you 5 minutes to do it on Google, and you'll walk away saying, my God, this is exactly what they are doing. 17 million people. Now imagine 1% of those have bad intentions. It's 170,000 people. How about 5%? That's you're talking almost what, a million people that would want to do damage to this country. Now I hope not, but look what happened in Dearborn, Michigan. All these people saying death to America, death to America. It's very frightening and it's very concerning. And I don't know. I think, to me, I talk about economics, I talk about precious metals, but what's happened to this country is of far greater concern to me. The electoral system, the judicial system, where I mean, I don't care what side of the aisle you're on. How do they find this guy? How do they find President Trump guilty of all 34 charges? Is just unbelievable to me. And all of the violations that went along in this trial, it's just insane. Or the mass immigration problem, or the wokeness, or the lawlessness in the cities, or all of these things that made this country great. The move away from the nuclear family, the move away from religion, and the things that actually made this country special. It's all forgotten, and it's accelerating. And to me, that's far more concerning than the mismanagement of the monetary policy of the Fed and the irresponsible spending fiscal policy of our government. Is what's happening to this great country. And I'm sure you see it every day living in California and in the big cities. It's really a shame, but that is actually one of the tenets of the Cloward-Piven theory, is to overwhelm the inner cities, overwhelm the welfare system. In essence, create a system that, in essence, blows up the whole system and moves towards universal basic income and into a socialist agenda. And, it used to be you'd feel like a goofball and a conspiracy theorist to say these things. But you look around and say, my God, I mean, how is this stuff happening? How is it that it's even being allowed to even be discussed? And yet it seems to be accelerating. And I don't think we've seen the end of it, to be honest with you.
I don't think so either. It's almost like watching a really bad movie, and you just keep watching it. You're hoping something's going to change, and then it's a train wreck at the end of the thing. And that's really what I'm seeing. The county I live in, Orange County, there's a stark difference between Orange County and Los Angeles County when you look at the two counties. And there's people that are starting to make social media videos where they end up in Orange County lost, and they can't believe what they see, that everything's clean, that there's no crime. And, it's an over-exaggeration of things. We still have some crime here, but LA County has gotten really bad. When I go to a Dodgers game, I need to basically bring protection with me because I don't feel safe. And obviously you can't bring that into the stadium with you, but it's just driving the streets. When you have to get off the freeway, homeless encampments are all over the place. People are all over your windows on the cars, and they're right up against you, and drug deals are going on and everything else. So there's definitely a fairly scary element of that is continuing to grow. There used to be one of my favorite burger places, Shake Shack, that we would go to downtown LA, where the whole area now is just Shake Shack and everything else is boarded up.
Shake Shack will be gone from there very soon too, just like
they're going to have to leave. They're going to have to leave because it won't be safe. So I'm never going back to that location because it's not safe. Last time I went there, I'm like, we had to keep the car running with a couple people in it. I had to run across the street quickly. It wasn't safe.
And, I told you before we started that, my parents were hippies. I grew up in the era of sex, drugs, and rock and roll, and I am very tolerant, socially. And yet I'm blown away. And, I'm a patriot, man. This country's afforded. I'm the least likely person to have ever reached the level of success I have. And I thank God every day for being born in this country and for the opportunities it afforded me. And I look at what I see now and think there's a snowball's chance in hell that my kids will be afforded the same opportunities that I was. And I hope I'm wrong, but we are heading down a path where, look, we're creating $1 trillion in debt every 100 days. It took us over 200 years to do that the first time. 1 trillion seconds ago was 31,688 years ago. And I mean, you can't make this up. if we don't get some sort of a change very soon, I think things are going to get very bad. Listen to this. The U.S. national debt is at $34.7 trillion. If you laid that many dollar bills end to end, it would wrap around the earth 134,599 times. That's enough to travel to the sun and back 17 times. But that doesn't even take into account Medicare Part B, which is 99 trillion in the whole. Medicare Part D, 22 trillion. Social Security, 77 trillion. Government military pensions, you're almost to 200 trillion in off-balance sheet unfunded liabilities. So when you talk about, letting 17 million people in here illegally, with wide open borders, who's going to pay for them? How does California pay for this when they're already broke? How do you pay for food, education, clothing, housing, medical? How do you do it? And these are things that no one's talking about in terms of the politicians, and all we're focused on is a circus sideshow of prosecuting former President Trump and all of the nonsense, and yet the things that really are detrimental to this country and our way of life are being brushed under the rug. And I think there at some point the bar tab has to be paid. I hate to be a buzzkill. I'm not a doom and gloomer, but there's a fine line right now between reality and pessimism. And I wonder where it is. It's kind of blurred at the moment, but I apologize for being that way. It's very disturbing to me, and it's starting to make me itchy. Like, I can't believe the things that I see. And our government has just lost their bearings.
I agree. Like, one thing I don't do a lot on my channel is talking politics. And, I've looked at both the domineering political parties in this country have, in my book, a lot of them have been the same. It's the same coin, two different sides of it. A lot of the actions. We've seen a lot of spending. So no matter who the president is, it seems like they spend more than the previous president. We've had laws be passed by Republicans that I was floored by. I couldn't believe it actually happened. And so for me, Andy, I'm a patriot as well. I'm someone that sees the Constitution, the U.S. Constitution, as being something that was divinely inspired to our founding fathers by God. And I think it's something that has been able to keep this country going as long as it has. And so what I see now is it's not so much against a specific political party per se. It's the people that are in the parties, and it's the actions that are coming out of the parties. And so now, to your point, I feel like I've got to speak out about some of this stuff because it's just getting crazy. And the moment that it starts really affecting my family is where I really start to get more woken up about it. And unfortunately, I wasn't awake a long time ago when I could have done more about it. And I think that's kind of the state that the country's in. So for those that are starting to wake up now, and we're looking at all these different situations that are going out there, I know there's things we can do, like talking to our politicians, writing to them. We can vote. We can get involved in our local government. But when it comes to personal sovereignty and finance, what are some of the things that you see out there that you're talking to people about on different channels that we can do to try to at least secure some of our financial freedoms and future?
Well, I always tell people, do the best you can to get out of debt. And I know it's easier said than done, but I remember talking to my grandfather. I couldn't have been more than 7 or 8 years old, and he used to pitch me baseballs every day, and we would talk. And I remember him telling me that he wouldn't buy a house or buy a car unless he had the money to do so. Now, granted, the first house the first house that I remember living in, probably not the first house my parents bought, but it was $75,000. They sold it for $700,000 or $800,000 many years later. First house that my grandparents bought, if you go back to like 1960, the Census Bureau will tell you the average price of a house was $17,000. Now, the value of the dollar has certainly declined, but it's gotten to a point where everyone in this country feels it's their birthright to go into debt. Big mistake. Do not become a debt slave. Do the best you can to let the laws of compounding work for you instead of against you. And in that same vein, I would say pay yourself first, always, no matter what. There's always a reason to not. Oh, I got to do this. I got to do that. I owe this. You can buy an ounce of silver. You can buy a tenth of a Bitcoin. You can do whatever you are going to do to pay yourself first. And I don't care what your your chosen vehicle is even a $10 bill in a jar, which isn't probably the best way to do it because of inflation, but it's better than nothing. If you don't pay yourself first, it's like working out or dieting or anything that you're trying to accomplish. If you don't become methodical about it and regimented, you wake up one day and you're 53 years old like I am and wonder where the hell did all the time go. And so to let the laws of compounding work for you instead of against you. I tell the story all the time. I started this company with my father. I was 19. And he told me the only rule is that I'd buy something every 2 weeks when I get paid, gold or silver, period, or he'd fire me. That was 34 years ago, and I own the company outright. And he's still, he's still alive, and he's not going to fire me any longer if I don't honor that. But I've honored my word, and it's the best gift my father's ever given me. Honest to God, the best was to make me understand the laws of compounding and make me understand the importance of doing all I can, even if it's little by little, over time, to allow me the opportunity to get out of the rat race. And that's, if you're anywhere near my age, you probably don't feel that in your brain. Your body may say, yeah, that's how old you are. But, I feel like I'm 20 years old, and I don't think of things that much differently. You know what I'm saying? And life has a funny way of creeping up on you. My dad says life's like a roll of toilet paper. When you're young, you don't notice the passage of time. You don't notice it spinning. As you get older, it spins faster and faster and faster. You start to notice the cardboard. Now, I don't really see the cardboard yet, but you understand what I'm getting to at, and time keeps on going. And if you don't pay yourself first, you'll never get out of the rat race, get off the wheel. And if you do as everyone else does, try to keep up with the Joneses, you're doing yourself a great disservice by going deeper and deeper into debt in an environment where the economy has every appearance of beginning to slow down. And inflation's not going anywhere. I expect it to accelerate. What you will have is a slowing economy, higher taxes, higher inflation. That's called stagflation, where you have little or no economic growth, but higher prices, higher inflation, higher taxes. President Biden is talking about, if he gets reelected, that he will raise capital gains taxes to 44%. If you have over $100 million, you'll pay 25% unrealized gain taxes. This is a government that is starved for revenue and will do whatever they can to get it. And that means higher taxes and higher inflation, which is a hidden tax. So if you don't get out of the way of it, and if you are fully invested in dollars, I think you're destined to go broke. If you're not a contrarian, you will be a victim. So what do? Pay yourself first and do the best you can to chip away at the debt that you have. Because if not, I think it will be a much bigger problem than it is today as rates go higher and the economy slows down. I think you have to get started now. We're already late in the game, late in the cycle.
I agree. What do you say to the people that say, hey, I'm going to stay in a bunch of debt because there's going to be some kind of a debt jubilee type concept down the road where inflation's going to go so high that it'll be really easy to pay my debts off down the road?
Well, think of how screwed up that is, because someone's debt is someone else's asset, right? And I mean, how about the person who spent most of their life working their butt off to pay for a couple of duplexes or an apartment building or whatever, and they're just going to get stiffed and be okay with that? I could see a debt jubilee in terms of treasury debt. And I say that to you because the majority of the debt in this country is owed to us, right? Medicare, Medicaid, Social Security, government, military pensions, $150 trillion owed to us. Who's been selling all the treasuries lately? Well, that's the central banks of the world. China, Japan, Saudi Arabia, Russia. All of these countries are shedding treasuries because we have proven that if you are not aligned ideologically with us, that we can very quickly sanction you, seize your assets. And now they're talking about confiscating the Russian assets, at a minimum, taking the interest on the 280, 300 billion in U.S. treasuries that they own, taking the interest and using it to fund the Ukrainian war, the country they're fighting against. All of the countries of the world look at that and say, oh my God, why would we ever want to hold treasuries? Not only have they been really poorly performing over the last year and a half, but now they can be taken from you, frozen, stolen, and used against you. So when you talk about where this is ultimately going, how this ultimately plays out, I think that the only thing that I could see being forgiven would be treasury debt, because it's defaulting in essence on us, because as the rest of the world has been shedding treasuries, we've been buying them. The mutual funds, the hedge funds, the money markets, all the people chasing yield, earning 5.5% in a 6-month treasury or whatever. It's the people in the US and largely the funds that have been buying the treasuries as the sovereign nations have been selling them. So it's a lot easier to default. Maybe only 20% of the debt is owed to the countries around the world. The rest is owed to us. So you default on the debt and you blame Xi Jinping and Putin and OPEC and all of the they dump the dollar, they dump the petrodollar, as I've talked about ad nauseum, because we signed an executive order to go green. Our chief economic advisor, Jared Bernstein, wants to lose the reserve status. We've weaponized the dollar. We've let the country fall apart. The world is like, why would we hold their debt? Why? I mean, it's just foolish. So instead, they're buying gold. And you can see that in the central bank acquisition numbers. They're going through the roof. At the same time, treasury purchases are falling, as are the sale is increasing of those treasuries. So I would say if you're going to default on anything and call it a debt jubilee, it would be on U.S. debt to the American public. And how do you get paid back? Well, that's easy. Sign on the dotted line and take the CBDC that the number 2 economic advisor in this country has worked with MIT to develop. Lael Brainerd, modern monetary theorist. You take the CBDC, will make you whole. And, a debt jubilee where all of your credit card debt and all the debt you owe to your landlord that's just crap as far as I'm concerned. It ain't fair. It's not the way this country was run. I know that, the debt jubilee thing goes back to the Bible and all of it, but not when you're the most indebted nation on the planet. It's not fair. Any more fair than it is giving, paying off people's student loan debt. The mayor of frickin' St. Paul, my old hometown, Minnesota. I didn't live in St. Paul. I lived in a suburb of Minneapolis, but he's making $140,000 a year, and he just got his college tuition debt paid off. How is that fair? And why not just give everyone a check for $30,000? And why is it just the people who took a commitment to go to school to better themselves, failed, and didn't really achieve what they wanted, and now they're asking to be bailed out or just getting bailed out? It's wrong. And it's just as wrong as forgiving all of the debt when we go into debt, knowingly going into debt, knowing what we're doing and forgiving it. It's wrong. But I could see it happening on treasury debt and government debt. And the solution then is to take the CBDC and nothing ever happened. You're just made whole. But now you're locked into the new system.
Yeah, I don't want to take that stuff. I may not have a choice with my employer at some point. That may be something that just, this is what you're getting. So my choice is to work for someone else that doesn't pay in that form. But that's going to be an interesting day when that comes. I think that's going to be a hard decision for a lot of people to make.
Well, and I've talked about what would happen if OPEC and Saudi Arabia said we're not taking dollars anymore for oil. Every country in the world has had to own dollars, stockpile them for 50 years, which, by the way, I think it's June 6th will mark the 50-year moment. And the Crown Prince of Saudi Arabia recently said China was our most important trading partner last year and for the next 50. He chose those words very specifically. And if every country on the planet dumped dollars because no one's taking them for oil anymore, that's why they have to hold them largely to buy oil, it would create hyperinflation as all those dollars come flooding back home. And the byproduct of that is interest rates that go parabolic to compensate for the loss of purchasing power of that hyperinflationary moment. And what is inversely correlated to that? Well, the banks they're over leveraged and undercapitalized. The insurance companies they're loaded with treasuries, as is the inverse correlation to stocks, bonds, and real estate. So the dollar collapses, the banks collapse, the real estate market collapses, the insurance companies collapse, the stock market collapses, and the bond market collapses. But everything's okay. Just take the CBDC and you too can be made whole. So could that happen? I don't know. We signed an executive order to go green. We've weaponized the dollar. We've let the country go to hell. Could it happen? You tell me. I think it could. And if it does, A lot of people would say the Fed has two choices, inflate or default. How about find a villain? Those bastards did it to us, Xi Jinping and Putin and OPEC. How could they do it to us? I don't know. Could they? Did we incentivize the world to do this? Are we incentivizing them to do it now with our behavior and our actions? And, Janet Yellen can go to on CNBC and say, listen, China, we're okay with you being friends with Russia. And that's very benevolent of you, Madam Secretary, considering they're partners in the BRICS. But if you give one penny to the Russian war machine, we will sanction your banks, your corporations, and Beijing itself. Never mind the fact that we've given over $200 billion to the Ukraine with no congressional oversight. We're the world reserve currency. We can do that. That hypocrisy is wearing very thin. So do you think it could be done? I don't know. What are the chances? 10%, 5%, 2%, 50%? Don't know. But if it's any percent, you should at least protect your assets, thinking about what would happen if all of a sudden we woke up on a Monday morning and overnight the dollar was forsaken for oil and no longer accepted. And every country in the world that stockpiled them dumps them. What does it look like? In a matter of hours, it's Armageddon. And so when you talk about this stuff, I hope I'm wrong, dude. I got 3 kids. I really hope I'm wrong, but I don't think I am.
It doesn't sound pretty. It could be pretty gruesome.
No, and it's not pretty, and it's awful to even talk about it. But how many things have you seen in the last few years that you can't believe that you would ever see or ever say? And I would say for most people, there's a dozen or more that they could point to if they thought about it.
I think there's been a lot of stuff. So one of the things that I've been doing, Andy, is I have been, I don't necessarily buy every 2 weeks. Sometimes I buy every week. Sometimes I buy monthly. But I continue to be buying precious metals. And, I do have gold. I do have silver. I don't have any platinum right now. And I stay away from the other metals for the most part. I like copper to put into my dummy safe. So that's kind of a fun thing that I do for that. But, when I'm buying right now, I've taken some of your advice from our previous conversations, looking at the gold to silver ratio. It's something that I think it's overlooked a lot of times by stackers. And the reason why I think it gets overlooked is there's more of a mentality that I will never sell, I will never trade. All I'm going to do is accumulate. And I don't think there's enough conversation around what's your exit strategy, what might you do down the road. It's great to think that everything's going to be rosy and you just pass it on to your children. But I think there could be some opportunities here where we're going to have to tap into those savings accounts of precious metals down the road. And one of the things that I just don't see people really talking a whole lot about, you do, but a lot of other people aren't, is that gold to silver ratio, which as far as I've seen it go from 80 up to 90 down to 72, and it's starting to move back up again. Do you have any thoughts or any advice you can give us as far as understanding the gold to silver ratio and looking at it when we're sitting down today, looking at the prices of spot and making a decision? Do I buy gold today? Do I buy silver?
Well, let's go back 5,000 years and dig a big hole, and what we'd find is a 16-to-1 geologic ratio. Even when Sir Isaac Newton was figuring out the ratio of gold to silver for the mint, the Royal Mint, he chose 16-to-1, 16 ounces of silver versus 1 ounce of gold equals 1 ounce of gold. But that, for 5,000 years, was the geologic footprint. And if you realize that when we hit the Industrial Revolution, right around that time, called 150, 200 years ago, largely because of gold's role as money and the logistics with silver, the price ratio, the man-made ratio, not the God ratio, which is in the ground, but the man-made price ratio has averaged for the last 100 plus years roughly 42-to-1. There's been spikes up and spikes down, but roughly 42-to-1. That's the price ratio average. So like your skin is epidermis, silver is found in nature in a form called epithermal, which means real near the surface. And so the big deposits were found decades ago. Over the last few years, we've had structural deficits of over 200 million ounces per year, meaning there's more demand than there is mined. And it's interesting to note that over the last few years of, let's call it 1 billion ounces that is mined, comes to market, only about 300 million of those billion come from companies that specifically mine silver. Because it's so near the surface and the big deposits were found even before the advent of advanced imagery, largely, the big deposits are gone and hard to find. So there's only a handful of silver companies that specifically mine silver. The majority of all the silver, over 60+%, because some comes from recycling, but over 60% of it comes from byproduct mining, where companies are mining tin or copper or gold and stumble across some silver and sell it to the market. So much so, it's depleting so much that the current mining ratio is 7-1. Now, Keith Neumeyer is a friend of mine. He's the CEO of First Majestic Silver. He's also on the board of other gold companies, and he's publicly said ad nauseum, he's told me personally last year in Boca at Rick Rule's conference that it is a 7-1 ratio. 7 ounces of silver for every 1 ounce of gold. It's disappearing. And if we go back to, I think it was March of 2020, in the middle of COVID, you had 120-1 or real damn close to it, highest ever. But let me tell you how this really plays out and why I think it's the trade of a generation. In 2010, I did my first YouTube video, and it was with my friend Bix Weir. And I had known Bix, and he had a YouTube channel, and he was all about silver. And I woke up one day and said, my God, it's 85-1. I did some digging and called up Bix. I said, Bix, I've gone back as far as I can. And I see this is the second time in history that we're at 85-1, meaning 85 ounces of silver is worth 1 ounce of gold. Keeping in mind that until that point in 2010, it was always 16-1 geologically and roughly 42-1 price-wise on average, going back to the Industrial Revolution. And prior to that, it was always 16-1. But I said, dude, we need to do a video, and I need to tell everyone to sell their gold to me. I'll sell it to the market and to replace it with silver. Now, there are premiums on both gold and silver. Let's just speak in generalities here. In essence, anyone who would have traded an ounce of gold would have gotten 1 ounce or would have gotten 85 ounces of silver in return, right? So, and I said, it's the second time this has ever happened in history. So keeping in mind that for the last 100+ years, the average has been roughly 42-1, within 7 months in 2011, and everyone I talked to did it. I said, you got to do this. This is an anomaly. This is 4 feet of snow in the Florida Keys in August. It's an anomaly. If it look, I live in Delray. I live on a golf course. If I woke up to 4 feet of snow here today in June where it was 85 degrees, I'm from Minneapolis. I have 2 snowmobiles in my sister's garage. I wouldn't call her up and say, Betsy, send me my 2 snowmobiles, would you? Because I'm going to go for a ride in the backyard. I would know it's an anomaly. But that is what this is in historical context. So when those people in 2010 traded me an ounce of gold for 85 ounces of silver, within 7 months in 2011, you had $50 silver and 1915 gold, their previous highs, and that's 37-1. So within 7 months, you could have traded, you got 85 ounces for 1 ounce of gold. You would have only needed 37 to go back into it. And you would have made over 2.25 times what you started with without spending any money. That's the gold to silver ratio, the law of averages, the regression to the mean. The further away you get from historical averages, the greater the magneticism or likelihood that you return to the mean. Like 4 feet of snow in my backyard here in Florida, when in June it doesn't ever get dropped below 60 degrees ever. And if it did snow here, I wouldn't pull out my skis and be looking for a hill. The point of it is that it's the same thing here. So when you talk about the gold to silver ratio, I do believe, and I'm not trying to be sensational. I think it's the trade of a generation. And it's an opportunity you don't ever see in finance where a double is only returning to the 200-year average. And so, yes, you buy silver and you realize that silver, the reason that the silver is so disconnected from gold is because of its suppression on COMEX, which if we have time, we can dig into what's going on in the silver market. But it's been manipulated to abnormal levels, kind of like suppression of interest rates that creates distorted asset prices. Well, manipulation on the paper COMEX market has created horrible distortions with silver. And in its relationship to gold, it is an anomaly in historical context, a geological context. So yeah, you would buy silver, and then when it gets to 40-1, you're still at 42-1, you're 6 times higher than it's coming out of the ground at. So you could consider trading in, and that's pretty damn close to a double. But if we woke up, let's look, here's the truth of it. Right now we got gold at, call it 2350. And if we divide by 7, which is the current geologic ratio, if you woke up tomorrow morning and that's what silver was, $335 an ounce, it would not be out of line. It would not be crazy pie in the sky hyperbole. It would be the current geologic ratio. And if you realize 42 to 1 is the average for the last 100 years, so okay, take that same 2350 and divide by 42, you get $56. So silver, its price right now is ridiculously, historically, geologically, way out of whack. And there are very few times in history that you would get this type of opportunity. But, big but here, and this is where Bix would probably punch me in the ear if he heard me say this, because he's more of a silver guy. The Bank of International Settlements is the most powerful bank on the planet. And by reclassifying gold as they did in 2019 as the world's only other tier 1 asset, the only other tier 1 asset next to US treasuries and dollars, they did it for a reason. So in the end, I would think you want to convert a good portion of that silver back into gold, doubling or tripling what you could otherwise buy today when it gets back into its historical norm or closer to its geologic ratio. And because I think the most powerful bank in the world wouldn't have done that just for the heck of it. So I don't think you do it with all your silver, but the gold to silver ratio trade to me is at least the trade of a decade, where you go much heavier into silver, and when the ratio corrects, you switch to gold. Doesn't cost you anything, and you can easily double what you started with, and that would only be just reaching the average. And way far away, still 6 times away from its geologic footprint, or as my buddy Bill Holter likes to call it, God's ratio. God's ratio was 16 to 1 forever. Now it's 7 to 1 because we've already exhausted all of that silver. And if you think about the difference between silver and gold, silver is used in tiny, tiny quantities, like in this, and in everything, even in this little keypad or trackpad, everything that conducts electricity, just about, or is electronic, has a little bit of silver in the circuitry. And all of that stuff is in landfills that's been used for the last 80 years. It doesn't get recycled when it's a tiny, tiny, tiny little amount. Or just about every ounce of gold that's been mined since Genesis is still here in the form of coins, bars, or jewelry. And so it's a deal where silver's continuing to deplete. It's increasing in demand in green and digital applications, in military applications, which, by the way, the Silver Institute neglects to mention. And yet I have a friend with the Department of Defense who tells me that there is indeed between 13 and 14 kilograms of silver in the tip of every Tomahawk cruise missile. It's 500 ounces. How many missiles have been fired in the last few years? That's just one form of high-tech weaponry. So when you talk about the incentive or the reason why the central banks, the commercial banks rather, in the West have held down silver, it's because it's not an industrial metal. It's damn well strategic. And you need it for so many things, including military warfare. And you could argue that the military-industrial complex is pulling all of the strings. And if you need it for high-tech weaponry and aerospace and all of these high-tech gadgets that they're using and buying and selling to the world, enriching a handful of companies, well, they have every reason in the world to want to hold down silver. But the difference is you have countries like India and China who are now playing a different game, who are now wealthy enough, industrialized enough, sophisticated enough, and coordinated enough to drain all the silver at these make-believe prices, and it's nonstop. So the only way you can manipulate a market for an extended period of time is to push it in the direction that it's going. And these countries, largely the Southern Hemisphere, the BRICS, they're not playing that game anymore. And it will end badly for a lot of these commercial banks. It will put some of them under. And so, yeah, I think it's the trade of a generation. I think silver will go higher than anyone thinks possible. But in the end, I think you want to have a large portion of that into gold because it is the only other tier 1 asset in the world. It's money and will be long after the dollar bills in our wallet are hanging from a frame in the Smithsonian as an example of what used to be.
I agree. So Andy, real quick, I don't know how much time we've got left for you here, but do you have enough to maybe hit just a little bit about what's going on with the COMEX?
Yeah, I mean, I got time. I had a 4:00 meeting. It got canceled. So, I mean, what I would want to talk about would take a little bit longer than, 3-4 minutes. If you got time, I got time, because it's more than just the COMEX.
We can always split this into two videos too if we need to. So
All right. Well, let's talk about what's going on with silver. First of all, right now in Shanghai, silver's priced pretty damn close to $4 an ounce higher than it is in London and in New York. And I would argue they can't hold the paper. Oh, sorry, that they can't hold the paper price down any longer. I think China is in control of China and India, and these countries are more in control of the price, in particular China, of silver than the West is. And while I hate to say this phrase, a silver squeeze, it seems to be coming together as far as I'm concerned. And it's like commodities. Zoltan Pozsar said that we're entering Bretton Woods 3. He's a brilliant man, used to work at the New York Fed. Bretton Woods 1 is when we took over for the pound sterling after World War II. Bretton Woods 2, loosely, when we became the petrodollar after Nixon closed the gold window. He says Bretton Woods 3 is a system that will be explained by commodities and transparency, a la blockchain and commodities. And I would argue that commodities are becoming more valuable than money, than currency. Commodities are becoming money. And it's like the gold and silver markets are playing by a new set of rules, and especially silver. And these bullion banks, these commercial banks that are as dumb as a mud wall, are massively short silver, like the most ever, hugely short on COMEX. And as the price of silver keeps going higher, the losses on the books of these bullion banks is growing very, very prohibitively dangerous. I mean, like put them out of business dangerous. And the banks will be forced to cover their paper shorts before the losses become unbearable. So there's a lot of talk right now about the global inventories disappearing. I've talked about this since 2020, about how all of a sudden the COMEX and the LBMA have been bled dry. How the LBMA just reported that they have their second lowest holding of silver ever in the 140-year history of the exchange. And the COMEX has watched massive outflows over the last couple of years. I talked recently about a huge amount of gold kilo bars. And the COMEX typically trades in 100-ounce bars, but the mini contract is kilos. And a massive amount, like $500 million 3 Fridays ago, was delivered to BRICS Hong Kong. Now, BRICS Hong Kong is a COMEX vault. It's a COMEX vault in Hong Kong. And the theory is that nothing goes into BRICS Hong Kong unless it's an exchange for physical. It's a way that members can buy a contract in the West, members who have the ability to trade on COMEX, buy in the West and take delivery somewhere else. Usually it's London, but if it goes to BRICS Hong Kong, largely it is an exchange for physical transaction. And the theory is that this is exactly who has $500 million to buy kilo bars with, have it delivered to BRICS Hong Kong. The theory is then, and largely because Shanghai Gold Exchange trades in kilo bars, that there is a truck waiting to pick those bars up in Hong Kong and deliver them to the Shanghai Metals Exchange in Shanghai. So they are using the suppression of the Western market against us in gold. But what's happening in silver is very different. And silver is literally disappearing off the LBMA. It's disappearing off the COMEX. And it's also being backdoored out of the ETFs, where the big bullion banks have the ability to take possession of silver out of the ETFs if they own enough. It's called a basket. I don't know, $30-40 million worth, whatever it is. But here's where it gets interesting. So all of a sudden, there's a lot of talk about bullion bankers showing up at the Shanghai Gold Exchange. And I did some digging myself into their website. And right on their website, we can see that for 4 straight weeks, starting the second week in March, first we saw Deutsche Bank, then HSBC Bank, and then JP Morgan, and then Standard Chartered Bank, all showed up at the Shanghai Metals Exchange. Now, if you look at the Shanghai silver inventory, since the second week in March, they've gone straight down. And I wonder, is there any coincidence in this, where there are deals struck in the back room, where these 4 banks who are part of the cartel that are suppressing and largely very short in silver are begging them for silver? Because all of a sudden, there's a squeeze on all of these contracts. I'm going to get into it. You'll understand what I'm getting at. Let me go further here. So it becomes more interesting when you realize that in China, gold cannot be exported without first depositing a bar in the Shanghai Free Trade Zone or at the Shanghai Gold Exchange. You got to deposit your own bar in there before you can export it, right? So this, in contrast with silver, which can be exported, would seem to indicate to me that these banks were not there to talk about gold, but there to seek help for their desperation in silver. And you know that if China is helping out, watching those inventories in the Shanghai Metals Exchange and silver fall, they're not doing it out of benevolence. There is a quid pro quo here. We know that India imported almost 600 million ounces of silver in the last 2.5 years. And to put that into reference, the COMEX silver inventories in registered category are 60 million ounces. And they are rehypothecated 1,600%, meaning 16 people own every contract. And it's probably a lot more than that. But the LBMA, as I mentioned, said they're at their lowest stockpiles, second lowest in 140 years. So here it's going to get more interesting, I promise. So this decades-long trend of the price of gold and silver being determined by the Western institutions, largely the bullion banks, it's breaking. And the flow of gold and metal from west to east, it's real. And I've been saying this forever. And I can't believe, I find it ridiculous how the Western media and many of the people, even who talk about gold and silver, underestimating the significance. All right, so let's talk about what this really means, right? So the LBMA is what's called the OTC market. The London Bullion Metals Association is a over-the-counter market. And that basically means that compared to the COMEX, which is an exchange platform where there's a backing of the COMEX by the house, in essence, the OTC market is that members of the market, they deal with each other bilaterally, and which means they take all the risks, including those of credit, between the two parties in the transaction. And the biggest difference in the OTC market versus a exchange platform is typically OTC is much less transparent, much less transparent, and much less in the way of regulations. Okay, so keep that in mind. So currently, the LBMA is the world center for wholesale OTC gold trading over the counter, and every major bullion bank is represented there, every one of them. So even recently, the Financial Times has pointed out that the central bank gold acquisitions, they pointed this out to the IMF, but the flows suggest that the real level of buying of gold and silver, especially with China and Russia, is way understated. And here's how that happens too. So on the London Metals Exchange, right, they tell us right now that they have 800 million ounces of silver, of which 500 million belongs to the ETF. So they're saying they have 300 million ounces. Yet they trade 292 million ounces of silver per day and 20 million ounces of gold per day on the LBMA, right? But there was a survey done by all the bullion banks who admitted, and the LBMA verified it, that the true volume of trades on that platform is actually at least 10 times the volume that they actually settle. Meaning if I buy 20 and sell 10, that's 30 trades I did or 30 contracts, they only show the net result of 10. So they're not telling us how much is done. So that would mean that if you take that at face value, the LBMA admitted it, as did the bullion banks, that they're not trading 292 million ounces of silver per day. They're trading 2,900,000,000 ounces per day and 200 million ounces of gold per day. They're all largely called spot contracts, where there are promises, where the bullion banks will sell the contract and the people who buy it, they think they own it by just simply posting a margin contract. And the people who sell it, the bullion banks, well, they promise to deliver if anyone stands for delivery, but no one ever does stand for delivery until recently. China and India, these countries are standing for delivery. So in other words, they're trading in the silver market at over 2,900,000,000 ounces. They're trading over 3.5 times the yearly mine production every single day. And when you look at the amount of silver in comparison to gold, it's a tiny market. At the LBMA, it only represents 3% of the gold market. So what you're seeing here is a situation where these bullion banks have issued mountains of paper, thinking no one will ever stand for delivery. It's a casino. They're betting, they're speculating, but no one's going to stand for delivery, right? And all of a sudden, you got these bullion banks showing up at the Shanghai Exchange where you can't export gold, but you can silver. And all of a sudden, you see this silver price skyrocketing. You see the silver price $4 an ounce higher in Shanghai. You see the LBMA stockpiles falling, the COMEX stockpiles falling. And almost to the day that these bankers showed up, and it's on their website, on the Shanghai Metals Exchange website, you see the Shanghai metals in silver fall off a cliff. Are they helping out these bullion banks so they don't have to default? Because if they default, they blow up the whole Western system. These bullion banks have trillions of dollars in derivatives. And this is why when Big Swear always said that silver is the Achilles heel of the system, I never really understood it until now, because the amount of leverage that these banks have put on is astronomical. And the difference between now and in times past is that these countries are standing for delivery. There is a very, very widely circulating rumor out there that China has told all of its citizens to start buying silver instead of gold. And you have 1 billion people who are going to start buying silver instead of gold. You have India buying it like it's going out of style. China's import numbers are going way up in silver too. And if you look at, and when I say, India's numbers going way up, it's ridiculous. If you look at what India has done here just recently, let me just find the numbers just to kind of hammer all of this home. I'm almost done here. Is that they bought, here it is right here. They bought, they bought 24 tons of gold in the first 4 months of 2024. That's 1.5 times what they bought all of 2023. And in first quarter of 2024, they bought more silver than they did in all of 2023, where they bought 400 million ounces, which right now would be 7 times more silver than is on the COMEX, and almost 1.5 times more that's on the LBMA. So India is buying astronomical amounts of gold and silver, as is China, as is Saudi Arabia, as is Russia, as are all the BRICS countries. And they're all repatriating their gold. India just took back all of their gold, all of it, from the Bank of England. And all of these African and what am I trying to say? African and Arab countries have repatriated their gold in the last 2 months from the COMEX. And so these countries are repatriating their gold and silver and going on massive, massive buying sprees. And then you see the inventories disappearing. And then you see the bullion banks showing up in Shanghai. And then you see Shanghai's numbers go down. What was the deal that they struck? Please bail us out. Please, we're in a pickle here. We're going to blow up. The whole system will blow up, and you guys will be in trouble too. We'll give you whatever you need in gold or copper or whatever concessions they made. I promise you, it was not out of benevolence. So when I look at silver right now, I look at it as the opportunity of a generation. Honest to God, I truly do. And the price that you see right now is not indicative of its value or how important it is to all of these governments. So much so that you have the largest concentrated short position in any commodity ever traded on COMEX, held by a handful of commercial banks who now seem to be fucked. And they're begging China to bail them out because these contracts are now being stood for delivery. And that's the difference. For my entire career, no one stood for delivery on COMEX. And now you see massive departures of gold and silver. They are using the Western suppression of the paper market to beat us at our own game. I'll try to sum it up in about 3 paragraphs or 3 sentences. And here's exactly what they're doing. So the Chinese vaults drain due to large demand exceeding supply. Okay, that's why they're showing up there, right? The Shanghai Gold Exchange and the Shanghai Futures Exchange, the prices go way up, and it's $4 an ounce higher there than it is in the West, incentivizing all of these traders who have the ability to buy in the West and deliver in Shanghai, like the big, huge gold shipment that went to Hong Kong, collect that arbitrage. The COMEX and the LBMA do what they always do. They try to slam the price down harder to protect themselves in these short positions they have, driving this spread between the West and China and allowing this 15% arbitrage in silver to entice the traders to monetize that arbitrage. And now you have the lowest level of silver held in Shanghai since 2020. Do you see how this all is playing out to a squeeze? And so it'll happen like that. But It's the little by little by little by little, this logarithmic decay I always talk about that drives people crazy because it's not instant gratification. It's not fast enough. But I can promise you one thing. When that happens, when that all at once moment happens, it will blow people away by how fast the all at once happens. It's being able to understand the little by little that this is not a small deal. You're talking a major once in a lifetime, once in a generation shift of power and of wealth and of significance. And I think it should not be understated. So when you talk about what silver really truly represents, it's the value of a generation. With all of that being said, in the end, I think you have to have a large portion of that into gold because it is the world's only other tier one asset, signaling by the BIS, the most powerful bank on the planet, what the intentions are for gold moving down the road. So I hope that makes sense. I hope I was able to lay it out well enough to say that this isn't just by coincidence. This is happening, and you can see it if you look closely enough.
No, I think it helps a lot. I mean, what we're looking at is silver is that we've got a trade of our lifetime that's here, and maybe it even goes multiple lifetimes, right? Because I haven't heard of anything quite like this in the past either. So we've got a great opportunity here to buy silver, and if this plays out the way that you're describing it, it looks like the silver price is going to go up a lot, which is that ratio going down in a lot of ways. You know, oversimplifying that at the moment, but there'll be opportunities for us to then trade back into gold, which is the only other tier one asset. So I think that makes a lot of sense to me. For me, I still have gold. I haven't sold all my gold and gone into silver. There's a reason for it in case, other things happen. But I am buying a lot more silver now than I have been gold. And if I happen to sell something that's gold related, a lot of times I've actually been replacing it with silver versus just with gold at the moment. So Andy, looking at that, if someone wants to get a hold of Miles Franklin and they want to talk to you about either the gold to silver ratio, potentially selling some gold and buying silver, or just buying gold and silver in general, how is the best way for them to reach out to you?
So they would want to send us, we can go to the website, but if they want our special price list, which will be as good or better than anywhere in the country, send us an email at info@milesfranklin. Mention the Stacking Surfer in the subject line. You can ask any questions about anything you've heard here or in previous interviews, or questions on precious metals IRAs, or you just want the competitive price list. Ask for it, and we'll send it out to you. And if you want to be contacted, let us know, and we will contact you. And if it's directed towards me, just mention, please forward this to Andy, and I'll take a look at the email and do my best to respond in a timely manner. But this is the best way for your people not only to be given the white glove service they deserve, but also to be given to see what special prices we have and to ask any questions that are burning a hole in their head to try and figure out the answer. So we're happy to do that. That's what we do.
I think that's awesome. So if you guys can and you're interested, definitely reach out that way and let them know Stacking Surfer sent you. It's awesome, Andy, that you would be willing to take some time to answer those questions.
Absolutely, man. And more than that, I want to do this all the way through the end of the year because, like that roll of toilet paper that's spinning faster and faster and faster and faster, I think so too will events leading up to the BRICS meeting in October and the election in November. I have a feeling there's going to be an awful lot to talk about. So I appreciate the opportunity, and I look forward to picking up where we left off, hopefully not too long down the road.
Yeah, we'll talk to you soon, Andy. So we'll get you back on it pretty soon here. So anyway, thank you again for your time. We'll talk with you soon.
Take care. Thanks again.
Yep. Bye, everybody.